Look at your bank account one last time. Because while you were sleeping, the East just set a price the West can't pay. Silver is $115 in Shanghai, and the vaults in New York are screaming, empty. That $100 bill in your pocket, it's not money anymore. It's just a colorful souvenir of a dead empire. The lie is over. Welcome to the physical wall. Everything you've been told about the stability of the Western financial system is a lie that is currently being exposed by a 3-digit number on a screen in Shanghai. It is late January 2026, and we have officially crossed the Rubicon into a world where the paper claims on wealth and the physical reality of wealth have completely divorced. For decades, the London and New York exchanges have operated on a gentleman's agreement of fractional reserve metal trading, where hundreds of paper ounces were traded for every single physical ounce held in a vault. But that game of musical chairs has finally run out of chairs. The great divorce of 2026 is here, and it's characterized by a massive, persistent, and violent price gap between the East and the West. While the Comex in New York is desperately trying to quote silver at a managed price of around $93, the Shanghai Gold Exchange is laughing at those numbers, with physical delivery being bid up past $115. This isn't just an arbitrage opportunity for traders. It is a fundamental rejection of Western price discovery. It is the sound of the global financial plumbing snapping under the weight of its own deception. When the price gap between two major exchanges stays open for weeks, it means the metal is no longer moving because there is no metal left to move. The arbitrage is dead because the vaults are empty. The data horror coming out of the Comex registered inventories is something that should keep you awake at night, if you have even a single dollar in a traditional bank account. We have seen a 26% collapse in registered physical silver in just the last 15 trading days. This is a systemic bank run, not on currency, but on the very collateral that backs the entire global debt pile. The physical wall is no longer a theoretical projection. It is a solid barrier that the Western central banks just hit at 200 miles per hour. Since January 1, 2026, China has reclassified silver as a strategic critical mineral and implemented a total export ban. Think about the implications of that. 60% of the world's refined silver supply has just been ring-fenced behind a government stamp in Beijing. They aren't selling their silver for your digital digits anymore. They are keeping it for their AI infrastructure, their solar grids, and their military hardware. They have realized that in a world of infinite paper, the only thing that matters is finite matter. While you were watching the news, the East effectively declared a physical embargo on the West, and the Comex is currently operating as a ghost vault, filled with nothing but IOUs and the prayers of trapped bullion banks. The desperation of the institutional players has reached a level of cardiac arrest in the silver lease markets. Lease rates have spiked to 11%, a level that signals a total exhaustion of lendable supply. The big banks are no longer just shorting the market to suppress the price. They are cannibalizing each other to find physical bars to meet delivery demands that they never expected would actually come. They've been caught in a 16-to-1 trap, where 16 people think they own the same ounce of silver. When those 16 people all show up at the vault door at the same time, the system doesn't just correct, it defaults. We are seeing major refineries running 24 hours a day with 14-week backlogs, and yet the silver isn't reaching the retail market. It's being diverted into private strategic reserves by big tech whales who have realized that their entire AI revolution is built on a metal that is vanishing. A $100 billion AI infrastructure fund is currently bypassing the exchanges entirely, buying directly from the mines and draining the physical supply before it ever hits the Comex. This is the cold execution of the paper-silver market. If you are holding an ETF or a silver certificate, You are holding a ticket to a show that has already been cancelled. You need to understand that this silver bank run is the precursor to the total collapse of the dollar's hegemony. For 75 years, the dollar was the undisputed king because it was the only way to settle trade. But when the East refuses to sell strategic commodities for dollars and instead demands physical settlement in gold or silver, the dollar becomes a local currency with global debt obligations. The global split we are seeing today is the final divorce between the productive economies of the East and the consumer economies of the West. The West has the printing presses, but the East has the mines and the factories. In January 2026, the mines have stopped talking to the printing presses. The Shanghai premium is the market's way of saying that the dollar is overvalued and the metal is undervalued by an order of magnitude. This isn't a bubble. It's a revaluation of reality. The leverage ratio has finally inverted, and the people who are still waiting for a pullback to $70 are the same people who waited for the Titanic to return to port after it hit the iceberg. The floor has been permanently raised because the supply-demand deficit has hit a staggering shortfall of 230 million ounces in a single year. You cannot print your way out of a physical deficit. Look at the kill switch protocols being activated by the CME group. They've raised silver maintenance margins by nearly 50% in a single week. In any other market, that would be called a crisis. In the silver market, they call it managing volatility. It's a transparent attempt to force retail investors out of their positions so the bullion banks can cover their massive short positions. But the flash crashes aren't working anymore. The dip buyers are now institutional, and they are buying for delivery, not for speculation. When the big boys start taking delivery, the game of fractional reserve banking is over. We are entering the February-March bottleneck, where the Comex faces a delivery requirement that exceeds its entire registered float by 500%. This is the moment when the registered status on the exchange reports is revealed to be a total fiction. The ghost vaults of London are already reporting multi-year lows, and the lease rates approaching 40% in some sectors are the final scream of a dying system. You are watching the disintegration of the Western financial architecture in real time, and most people are still worried about the interest rate on their savings account. The reality of 2026 is that if you can't drop it on your foot, you don't own it. The transition from a trust-based system to a truth-based system is a violent process that destroys everyone who is unprepared. The middleman is broken, the price discovery is fractured, and the physical metal is moving into the hands of those who intend to use it as the foundation of the new global order. The great divorce isn't coming, it's happened. The dollar in your pocket is a claim on a system that no longer has the collateral to back it up. The silver in the vaults is gone, diverted to the east and into the servers of the AI giants. You are standing on a platform, watching the hard asset train leave the station, and the ticket price is doubling every few weeks. This is the era of triple-digit silver, but more importantly, it is the era of the physical wall. When you hit that wall, the only thing that matters is what you actually have in your physical possession. The banks are trapped, the vaults are empty, and the dollar is a legacy suicide note. The question isn't whether you should act. The question is whether there is anything left to act upon. The clock has struck midnight, and the ghost protocol is the only thing left running. What we are witnessing in the final days of January 2026 is the violent resolution of a decades-long mathematical lie. The physical wall has not just been reached. The Western financial system has slammed into it at terminal velocity. For years, the guardians of the dollar told you that the price of silver was discovered on the Comex in New York and the LBMA in London, through the orderly trading of paper contracts. But today, that price discovery mechanism has officially moved to the East, specifically to the Shanghai Gold Exchange, and it is speaking a language of total systemic rejection. As of this morning, the arbitrage gap is no longer a mere discrepancy. It is a canyon. While paper silver on the Comex is being desperately suppressed at $98 by banks facing a margin call apocalypse, the physical reality in Shanghai has already shattered the $115 mark. This two-tier market is the Great Divorce in its final, most lethal stage. It is the definitive proof that the West has run out of the physical metal required to maintain its illusion of control. When the price in the East stays 10 to 15% higher than the West for weeks on end, it means the plumbing is broken. The metal isn't flowing to close the gap because the metal simply isn't there to move. The most damning evidence of this collapse is hidden within the ghost vaults of the Western world. If you look at the registered silver inventories at the Comex as of January 2026, you aren't looking at a stockpile, you're looking at a crime scene. In the last 3 weeks alone, we have seen a record-breaking drain of nearly 30 million ounces from registered accounts, the metal that is actually available for delivery. This isn't retail investors buying a few coins for their safes. This is a wholesale institutional bank run. Sovereign wealth funds and industrial giants have realized that a Comex silver warrant is nothing more than a digital promise in a system that is fundamentally insolvent. They are demanding their bars, and the vaults are screaming. We are seeing fails to deliver, hitting levels that the exchange hasn't seen since the 1970s. When you hear the term ghost vault, understand it literally. The ledgers say the silver is there, but the trucks leaving the facility are empty because the metal has already been leased, rehypothecated, and sold 400 times over. The leverage ratio has hit a point of mathematical impossibility, and the first people to realize it were the Chinese. The geopolitical trigger for this January explosion was China's official reclassification of silver as a strategic defense metal, effectively placing a total embargo on the export of refined silver bullion. By cutting off 60% of the world's refined supply, Beijing has executed a physical kill switch on the Western dollar system. They've watched the West weaponize the dollar for years, and now they are weaponizing the one thing the West cannot print, the physical collateral of the modern world. This is why the Shanghai premium has become a permanent fixture. The East is now the only place where you can actually get the metal, and they are demanding a price that reflects its true value, not the manipulated price designed to protect the balance sheets of J.P. Morgan and Bank of America. We are seeing reports of American industrial manufacturers, companies that need silver for everything from AI microchips to advanced missile guidance systems, desperately bidding in the dark pools because the public exchanges are dry. They are paying $140 an ounce for immediate physical delivery, while the spot price sits mockingly at $98. This is the physical wall in action. You can print another $1 trillion in a weekend, but you cannot manifest a single ounce of silver out of thin air. The supply deficit for 2026 is projected to hit a staggering 250 million ounces, mark the 6th consecutive year of structural shortfall. But this year is different because the above-ground stocks, the secret buffer that the banks use to suppress the price, have finally been depleted. The industrial machine of the 21st century has eaten the monetary reserves of the 20th. From the massive solar farms in the Gobi Desert to the AI data centers in Northern Virginia, the world is realizing that silver is the new oil, but it's an oil that cannot be pumped faster. Most silver is a byproduct of copper and zinc mining. If you want more silver, you have to build a copper mine, a process that takes 10 years. The market has finally done the math, and the answer is a total supply chain seizure. The institutional panic is most visible in the no-bid signals appearing in the wholesale silver pipeline this week. This is a terrifying development that the mainstream media is strictly forbidden from discussing. When a market goes no bid, it means the wholesalers and the bullion desks have stopped quoting a buy price entirely. Not because there is no demand, but because the price is moving too fast for their hedging software to calculate. The banks that sold billions of ounces in naked shorts are currently in a state of total capital failure. They are facing margin calls that exceed their entire Tier 1 capital. To survive, they are hiking margins on retail traders by 50% overnight, hoping to trigger a wave of forced liquidations that will allow them to scoop up your paper contracts for pennies. But for the first time in history, the flash crash trick isn't working. The physical buyers, the smart money, are standing their ground, and they are demanding the bars. We are now living in a fractured reality, where your wealth depends entirely on whether you are holding truth or trust. Trust in the US dollar is at an all-time low as the BRICS nations move forward with their commodity-backed payment systems, using gold and silver as the ultimate settlement layer. The global split is now a physical wall that separates the paper-shuffling economies of the West from the resource-heavy economies of the East. When you see silver cross into triple digits and stay there, you aren't seeing a rally. You are seeing the death of the dollar's purchasing power in real time. The $115 price in Shanghai is the true heartbeat of the global economy, and the $98 price in New York is the flatline of a dying empire. The vaults are empty, the miners are sold out through 2027, and the banks have pulled the credit lines. The bank run on the physical world has begun, and the only people who will survive the cold execution of the dollar are those who realized that the most expensive thing in the world is the truth you ignored until it was too late. The most terrifying aspect of this transition isn't just the price of silver. It is the absolute, uncompromising realization that the industrial heart of the Western world is about to stop beating because it ran out of the physical atoms required for its survival. We are witnessing a systemic, cold execution, where the digital economy of the West, built on high-frequency trading and AI algorithms, is being strangled by the material reality of the East. In this final week of January 2026, the silver bank run has evolved into a full-scale industrial blockade. When you look at the $115 price on the Shanghai Gold Exchange, don't see it as a ticker symbol. See it as a ransom note for the modern world. The physical wall is now undeniable, as the massive AI data centers that were supposed to drive the next decade of American growth are sitting half-finished because the silver and copper required for their conductive infrastructure have been diverted to sovereign reserves in Asia. We are seeing a 25% global supply deficit in critical metals that is no longer a forecast. It is a present-tense catastrophe. The Great Divorce has reached its logical conclusion. The West has the paper debts, but the East has the physical reality. The silence from the mainstream financial networks is the final, definitive signal that the collapse is irreversible. They are still talking about soft landings and disinflation, while the very copper and silver wiring of the global economy is being ripped out from under them. I have seen internal memos from the world's leading mining consultancy firms that show global copper demand exceeding supply by nearly a quarter, a gap that cannot be closed by printing money or lowering interest rates. You cannot solve a physical shortage with a digital solution. While silver dominates the headlines due to its monetary history, the copper shock is the silent killer that will bring the US dollar to its knees. Without copper, there is no green energy transition, no AI revolution, and no military-industrial complex. The fact that copper is being bid toward $12 a pound, while silver sits at triple digits, tells you that the world is no longer trading for profit. It is trading for existence. The sovereign wealth funds are no longer investing in the dollar. They are liquidating their U.S. Treasury holdings at a loss, just to secure the physical bars of silver and copper before the export bans become permanent. The institutional framing of this crisis has shifted from temporary volatility to national security emergency. We are seeing the activation of ghost protocols, where the Fed is quietly providing infinite liquidity to bullion banks that are fundamentally insolvent. These banks have been caught in a trap where they sold silver they didn't have to people who are now demanding it. The flash crashes they used to use to shake out retail investors are now being swallowed by industrial giants who are bypassing the Comex and buying directly from the mines. This is the end of price discovery as we know it. The public market is a fiction, a digital shadow play designed to keep the masses holding the paper while the elites move into the vaults. If you are still checking your bank app to see your net worth, you are looking at a mirage. In a world of a 400-to-1 leverage ratio, the only true net worth is what you can touch, weigh, and defend. The silver bank run of 2026 is the event that finally reveals that the emperor has no clothes, no gold, and no silver. The final domino to fall will be the domestic purchasing power of the dollar itself. As the global split accelerates, the cost of everything that requires silver or copper, which is essentially everything in modern life, will reset to the Shanghai reality. You are holding a currency that is being rejected by the very people who produce your goods. The $115 premium is a message from the future. Your money is dying, and the physical world is claiming its due. This isn't just about becoming wealthy from silver. It's about surviving the total devaluation of the paper world. The era of cheap commodities and infinite debt is over. We have hit the physical wall, and on the other side of that wall, only hard assets have a voice. The banks are closing the exits, the vaults are being emptied in the dead of night, and the dollar is transitioning into its final form as a legacy suicide note. The time for analysis is over. The time for possession has begun. You're either on the side of the physical truth or the side of the digital lie. Choose wisely, because by tomorrow morning, the price of the truth will be higher than most people can afford to pay. The great divorce of 2026 waits for no one. While the masses are distracted by the digital mirage, you now hold the blueprint of the deep meat, the data they are trying to bury. But information without action is just entertainment for the doomed. If you choose to survive this systemic execution, you need to be in the inner circle. Click the subscribe button and turn on all notifications. I am monitoring the Shanghai-New York arbitrage and the DTCC dark pools in real time, and my next update will be the difference between those who lose everything and those who inherit the new world. Don't just watch the collapse. Position yourself before the ghost protocol locks the exit. Subscribe now. Your future depends on it.